Nvidia stock is up 152% since January of this year. So if you had invested $50 in Nvidia on January 1st, 2024, you would have about $125 or so by now. As the earnings season has wrapped up with most of the mega cap earnings, Nvidia earning is coming up on 8/28, which is about 8 days from the time of this recording. Generally during this time, investors often ask the question, should we buy the stock before the earnings report or should we buy it after the earnings report? So in today's video, we are going to tackle that question, whether we should invest in Nvidia before the earnings or wait for a pullback and then invest after the earnings. So if you end up enjoying the video, make sure you give us a like, share with your friends and family, and without further ado, let's dive in. Nvidia has been on a complete tear since the last couple years. So if you had invested in Nvidia 5 years ago, you would be up over 3000%, and similar crazy numbers you can see with 10 years, as well as if you had invested from the beginning, you would be up about some 300,000%. So it's crazy numbers. Keep in mind, Nvidia also reported a split earlier this year, and that's the reason why we see these numbers are mostly after split numbers, just in case you were wondering. At this point in time, Nvidia's stock price is pretty much near its 52-week high. The high was $140 post split, and the current forward EPS for Nvidia is 2.73 with a forward PE of 45.70. This is a particular number that a lot of analysts are talking about, that it is still cheap to buy Nvidia at these prices. The reason is because there's a lot of growth. The primary reason for the growth is the data center investment or capex investment that is being put by these large Mag 7 companies. So companies like Meta, Microsoft, Google, they are spending millions and billions of dollars into the capex in the coming years during this AI revolution. Nvidia reported its last quarter earnings on 5/22. They beat their EPS by 5 cents and they beat their revenue by $1.48 billion. Yes, you heard that right, billion dollars. Next upcoming earnings, their target is about 64 cents in the EPS, and the revenue is supposed to be about 28.54 billion, which is going to be, of course, an upside from what they reported last time. I always like to look at the earnings history, especially it gives you a very good idea on how the company has performed. And generally, the big companies, the large companies, they are very good at managing their earnings expectation, and that's why the reason they do a lot of beats. Since the data of 2020, there's only one time they missed on the EPS. Couple times they came in line, but look at the revenue. Every single time they have beaten their revenue, and from the last 4 quarters or so, they have been beating their revenues in multi-billion dollars, 2.42, 2.01, 1.56, 1.48. So if this trend continues, we can probably see another beat by 1.3 or 1.2 billion dollars. That is the real question. If they are not able to beat the revenue by a wide margin, so for example, let's say they beat the revenue by $500,000 and they don't hit the $1 billion, we could see some weakness in the stock price, or at least the immediate short-term impact on the stock price. Keep this in mind that no matter which company it is, you cannot keep sustaining a $2+ billion surprise every single quarter. Now I'm assuming that you are looking to invest in Nvidia for a long term, and this is the current projection of their revenue for the next couple of years. So 2025 Jan, we are expected to have about a 97% growth rate. Total revenue they'll bring is about $120. That jumps to 166 in 2026, up to a 38%. Then we go up to 189, which is a 13.86, and then so on and so forth. So you can clearly see that we still have some room left, at least until a good 2026, where we will still see very high double digits of growth.